Hey everybody, welcome back to the channel. Today we're going to be talking about Bitcoin, the overall market cycle, the crypto market cycle, and why I think, of course, we didn't experience the peak and the actual market cycle is right on time. If you like this content, go ahead and give me a like, subscribe to the channel for more crypto news, analysis, and content. Obviously, we don't only talk about Bitcoin here, we talk about all blockchain related cryptocurrencies. Right now, we talk a lot about the trading, and I think that's because of the market cycle, where we currently are. But we are going to eventually talk about way more fundamentals, especially as projects start developing a lot more. So absolutely subscribe for all of that kind of juicy content. But I wanted to talk about Bitcoin. I wanted to talk about where we are and discuss exactly why I think we were ahead of schedule for the majority of the crypto market cap. I want to talk about some theories in terms of the markets calming down a little bit in terms of less pumps, less dumps, right? Or less exaggerated pumps and dumps, more of a mature market. And we are going to see this over time. And we saw this with the previous bull market. So we did see a double peak in 2013, which arguably was probably one of the more parabolic times. And really, you're at the point that it really could only go up, right? It's only up or zero at that point. So of course, there's a lot of parabolic motion when Bitcoin first came out. Obviously, 2017 is going to be the best judge of where we are going to get our trading data and understand exactly what is happening in this crypto market right now. Now, it is also important to note that what we're going to do in this market cycle doesn't have to be the same as 2017 or the same as 2013, or it could potentially be the same as 2013. We will talk about that here. A double peak is possible, but really at a macro perspective, I think Bitcoin and cryptocurrency was far out of pace, and that was probably driven by news media and everyone else pumping up Bitcoin and getting people FOMO and getting into the market. So to illustrate this, I want to take a look at how the crypto market moved from the bottom of the 2017 bull market, that whole market cycle. So from the bottom, and then measure that from our bottom. Now, there are a couple of things to be aware of. One, we expect that markets will probably lessen. We're going to get diminishing returns over time, right? So we're going to have less of a percentage increase each market cycle. That's to be expected. And also it's to be expected that we're going to last a little bit longer, more money, and we're going to drop a lot less, right? So over time, the market is going to calm down a little bit. But right now we are in such a small market cap that it's going to move regardless, even if Elon Musk tweets. We talked about that in the last video that we put out yesterday. But if you look at the crypto market, if you look at how this moved from 2017, from the lowest point, and we measure from the lowest point of our current market cycle, you can see that we were significantly out of pace for the market cycle. So we've said a couple of things already. We've said that the markets should have less of a gain, should be longer over time. So realistically, we should have expected the crypto market to kind of trade down here and make a move up to the upside like that, right? So it would extend, have less of a gain, and be under the market. But what we saw was decisively the opposite of exactly that. We saw the crypto market just shoot up completely, and we saw that news media come out. Everyone was buying Bitcoin. Michael Saylor was on MSNBC all the time. They had Pompliano on there. Everyone was talking Bitcoin, and everyone was buying Bitcoin. But I would argue that at that point, we were probably way ahead of schedule, that Bitcoin needed to clearly cool down. And now we're actually getting to the point where we could be getting to schedule, because realistically what we would like to see is a Bitcoin that would trade maybe more sideways or more under that motion, and then eventually pick up later on down the road, which is exactly what we've been discussing. This, to me, seems more like what we should actually be seeing if most of our market cycle theory is correct. So that is, if market cycles are going to diminish in terms of the gains and the drops over time, we would expect to see a market cycle more like this rather than the opposite. Now, what does that mean for our market cycle? Because we've talked about the market cycle. When are we going to peak? Are we going to have a market cycle peak? Is the bull market over? And again, I've said this numerous times. I don't think the bull market's over. And now if we look at our 200-day, of course, we're still under that 200-day, but we're not at the point where it could decisively change the market. We still theoretically could go above, but it would make sense for us to trade under the 200-day for a little bit and just fight at that level until finally breaking out. and then continuing our market cycle. I got a lot of comments before when I talked about the market cycles, when I talked about dumps, and everyone had this narrative of Bitcoin could not go down. It clearly cannot go down. It's just going to go up from here. And I aired caution. I was telling people, if you think that the crypto market cap isn't going to dump or correct at some point, you're in the wrong game, because of course it's going to. Just like stocks, not everything always goes up. What goes up must come down eventually. To what degree, that's a whole different deal. I'm not saying it has to go down to zero, but it does have to go down. And the same thing goes for cryptocurrencies. When they're going up and up and up, there's only one place to go, right? And you could say that, hey, we could still go up. And yeah, that's still a reality, but is the probability that we actually go down? And we get to the point where basically the market gets manipulated in a way that issues a bunch of fear and uncertainty, and that shakes a bunch of people out of the market and sends us into a dump. So that is most likely and exactly what happened recently. So just to illustrate exactly what I'm talking about, and I've discussed this in a video before, but I want to go over to the weekly chart again, and we're going to measure out some of the gains that we got into the crypto market cap and discuss exactly why I don't think this is the market peak that we're seeing here. And of course, like, it looks like a market peak. It looks pretty high, but it's a little bit rounded. So we could say, oh, well, this is how we could see market peaks from now on. I don't believe that. And let me explain exactly why. So we discussed that most dumps are roughly around 80% drops from the top to the bottom. So that's around 82. Now, we haven't seen that much of a drop, and every drop has been around the same, roughly 80% or so. Now, I will agree, and I will probably say for my own sanity that we're not going to drop 80%. There's no way we're going to drop 80%. But if you're telling me that we are limited at just dropping 51%, I don't think so. I think if anything, we have to drop at least 70%. For us to get into something like a bear market, right? So it could potentially still happen that we could still go to the downside and have an incredibly shorter market cycle than we had in 2017, which is completely against what we think should happen. And the reason why we're dipping is more because of human fear. And we've discussed this before. So often the crypto market cap will go up and down based on fear and emotion. Doesn't have to do anything with logic. It doesn't have to be about logic. It doesn't have to be about monetary policy being terrible and the United States dollar going down and Bitcoin being this deflationary asset that still is, regardless, the best store of value that you could buy. It doesn't matter. It doesn't matter. It matters what Elon Musk tweets. It matters what the fear is in the market. It matters what people think is happening. If you think it's a scam coin, it's going to be a scam coin regardless of what the actual reality is, because that's the sentiment in the market. The sentiment in the market drives the prices. That being said, we still go through market cycles. So this doesn't mean that our market cycle is over. I think our market cycle still has plenty of days still left in it. Now, we've discussed where this market cycle could go. Let's measure quickly a peak to peak from 2014 to 2017. So that is roughly 212 weeks. So if we look now at our market cycle here, peak to peak, we see a significant loss, roughly 1,000% or more loss. And it's only 173 weeks. It's a lot less time than is in the previous market cycle. So really, if you're looking at this and thinking that this is the market peak, obviously it clearly can't be, unless our theories are wrong and we are actually experiencing market cycles that don't follow lengthening theories or anything like that. They basically just go based on what the current economy is, which I guess is always a possibility. But realistically, if the economy is going down, that's when we should see cryptocurrencies and Bitcoin going up. And we see that with gold right now. Gold is making a massive run. We've been talking about gold tons on the channel. I've been saying dollar cost average into gold with your profits. It's going to help you preserve your wealth, especially if you're just sitting in USD. So obviously that's still a good thing. But I think this dip was mainly just a shakeout to scare people. And obviously it was probably one of the most vicious dips we've actually been through with cryptocurrency. So let's estimate exactly where we should be going. So we saw that this was roughly 212 weeks. Let's say that we're looking more at maybe 250 weeks. Okay, let's keep it conservative. We're not going to go overboard, and we are going to go at least 1,000% gain, which is more in line with what we've discussed about our 150K Bitcoin. And we're going to go 250 bars here. So if we measure out 250 weeks and going into the bull market and measure 1,000% gain, it brings us to roughly a $200,000 Bitcoin, which is definitely in the cards. Some people say 300,000. I definitely think that could happen. And even more so, the longer this market cycle goes, the longer we go, the more support, the higher numbers we're going to get. So really, I'm bullish at maybe a $300,000 Bitcoin, possibly, but tentatively, I'm saying more in lines with 150,000 is my personal price target. But if we did go this route, right, and we just traded within this channel and eventually worked our way back up and hit a market peak at a later date, where does that bring us? That brings us over to September of 2022. This is basically going into exactly what we should expect, where the market cycle actually should end. If you look at how 2017 worked, it was the same type of deal. It went on this continuous bull run until finally the new year. Now, we could do theoretically the exact same thing, but if you see how we moved, we went so incredibly up, almost hit a market peak up here, and then had to cool down for a little bit, and now are regaining some ground. So to answer the age-old question, is the market cycle over? Is the bull market over? Is the party over? No, I think the party has just begun. If you like the content, go ahead and give me a like, subscribe to the channel if you want more crypto news, content, and analysis, and of course, happy hodling.